Good morning, trading world. It is February 10th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: low liquidity, air pockets, and how they may be driving trade to a V-Day massacre. A lot of things I've said are coming to fruition. We are coming into a gap down today. At the same time, all my metrics are screaming bullish bias day. I really wish one part of my spreadsheet was working properly so I could see things and not just have a certain intuition about things. We are almost at the point of rolling over. I said we need to cycle back to overbought, or at least the rest area on larger time frame charts. However, if you wait until that completely happens on these larger time frame charts, you miss a huge part of the move. Liquidity is important now because the lack of it creates air pockets. We have wound up and down in the same range for quite some time, and I have warned about this. When we cycle through the same range over and over, you have to limit your investment because it is literally like putting all your eggs in one basket. If you continue to invest in this range, let's say the range is from 397 to 416. All it takes is one wrong move to wipe out your entire account. This is a part of risk management, understanding the range and not tying too much capital up in one place, no matter how big the range is. As we cycle through this range, you can see the market begin to run out of liquidity as volume dries up. Eventually, we have to either sell or free fall to a level where liquidity, meaning buyers that still have money, still exists. If we look at an hourly chart, let me bring up the hourly. And let's get some drawing tools up so I can focus on some things. All right. As I have up the hourly chart, I'm going to focus over here on what's called the volume profile. And all the volume profile is where we pretty much tilt volume, this right here, volume on its side, and show volume at the particular strike levels or strike price levels. And by doing this, we can get a good picture of these air pockets. And as you can see, we have a decent sized air pocket building up from this 409 area all the way down to the 404 area. So from 409 to 404 is a developing air pocket. And what happens when we hit these air pockets of low liquidity, it's like pressing turbo on a move, because regardless of whether we're coming up through it or down through it, we will fly through that patch without stopping. Air pockets are developing also at 411, above 411 and below 403 as well. So if we hit 403, we could continue to slide to somewhere between 400 and 397. Something that would also be key to today's session is that the market maker's weekly expected move lower edge is around 404. So if we break off of that 404 area, we could really begin to drop today. Breaking off would consist of seeing a big volume spike as we approach the 403 to 402 area. If we begin to cross above 411, which is also a developing air pocket, we could continue going up to the 416 to 418 area. This is also the reason that in today's levels, it's the reason why the queen and the king support and resistance levels have so much space between them today. This consolidation on larger time frames paired with these air pockets of low liquidity could point to a Valentine's Day massacre or Black Monday. Now, I should say, instead of lead us, I could say they could be the cause, because we could hit a certain patch and kind of continue going as these air pockets develop. With that being said, let's get into the key levels of the day. And here we are back with the key levels of the day. Starting on the resistance side, we have our Jack resistance from 406 to the 407 area. Our Queen resistance area 408 to 409. I expect to spend a little time because this is where the breakout really begins to happen. But you'll know once we break these levels, you know, the run is on. Then we have our King resistance levels 416 to the 422 area. On the support side, we have our Jack support at 404 to the 403 area. Queen support 402 to the 401 area. And then King support 400 to the 395 area. A lot rides on us staying above this, let's say this 40, this 400, staying above this 400 area. Because if we break below 397, this could really get ugly and we could really pick up momentum to the downside. Really, yeah, anything under 400, we could kind of pick up that momentum and continue lower. The main thesis for today is bullish, closing above the 407.09 with a projected target high between 407 and 422. The alternate thesis is bearish, closing below the 407.09 with a projected target low of between 407 and 398. The main channel we are in is from 397 all the way up to 416. The main channel above is 416 all the way to 425. At some point, I expect us to get like a peak, or I used to call it what did I call it? It's kind of like when you're at the pool and you're first trying to get in and the water's cold and you're trying to psych yourself out. So the first thing you do is dip your toe to feel the temperature of the water. And then you take a nice run back to get you a running start to kind of psych yourself out and just run and just jump in and just, you know, immerse yourself in the water. price action does the same thing. We're going to dip our toe below that 397 area at some point, and then take a huge running start back up. And then once we take that run and start back up, it's no stopping coming down. We are going to jump all in to the main channel below us. So at some point I'm looking for that to happen. Yesterday, market strength and breadth gapped up really high and faded from the start to the end of the day. I expect a gap lower, then consolidation, and then if VIX speeds up the daily chart to its rest area, either today or next Friday, we get one of the most powerful moves up we have seen year to date. We do have harmony today between the technical side, which is bullish, and the quant side, which is also bullish. This brings us to the scenarios of the day. All right, our first scenario is going to be our expanded range day structure. It is our most probable scenario today. We could have an initial push lower and begin to consolidate around the Jack or Queen support area. Breaking the consolidation range could lead to a big push up. So once we break that consolidation area, if we break it on the upside, we could be off and running. That could take us all the way back up to the top of the range of 416, all the way even to the 422 area, outside of the current major channel that we're in. That is our expanded range day structure. All right, our second most probable scenario is going to be our trend day down, meaning we open, gap down, and start with a push back toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. And a lot of times we come out the second half of the day looking to continue the primary trend of the morning, which would be down, but it usually evolves or reverses into a head fake, and we get some type of rally back into the close. I look for this trend day to be a little different. The rally back in the close could be larger than normal because we would have eclipsed the target. Also, a lot of the down move has already happened in the overnight session, so we may not push much farther down because there's a lot holding us at this level. We're already at the market makers weekly expected move, which, as we know, a lot of hedging takes place, and if we hold that area, we could kind of just sit because that's a happy place for risk. So that's our trend day down day type structure. All right, our last but not least scenario of the day is going to be our rounded reversal day type structure, which could be interesting if it does come into play today. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same energy or force we went down with the first part of the day. Now, normally I have a vice versa scenario on our rounded reversal day type structure, which is basically the complete opposite of what happens here where we get the continued push up first, level out, and I'll do it here. We get a continued push up first, level out, and then we come back down with the same amount of force or energy that we went up with the first part of the day. That's the vice versa alert. Now, there's another adjustment that I see possible to happen today if we do get into this rounded reversal day type structure. Let me remove the vice versa alert. But what could also happen on this rounded reversal day is that we get a play and we get sucked below that market maker's expected move, and we get something like this, which would be a big V-shaped bottom. This could also happen on the rounded reversal day type structure, and actually it would be better if I was to point to it where we have this type of scenario happen, where we push down pre-market and we continue up toward that previous close and begin our midday chop, but instead of a midday chop, we end up getting a midday drop. And that could be what actually takes place today instead of our vice versa alert. But it's just some things that I'm going to be paying extra attention to today during these pertinent times of the day. That 11 to 11:30 hour is prime for reversal, so you have to keep your eyes on these type of things as they could develop. This is a very important day because we're nearing the end of this sideways chop that I called at the end of January. Well, mid to end of January, I said we would go sideways till probably the mid or end of February, beginning of March. These are the signs that is coming to an end, and we're about to pick a direction soon. We're about to either continue that trend lower, or, as a lot of people want to point to in the media, a new bull market, which I just don't see a new bull market happen because of all the headwinds that we have to face. So, as always, it is of the utmost importance that you know and understand your risk, because your most important job as a trader is to protect the capital that you already have. And we do this, again, by knowing and understanding the risk that we have on, and we manage that risk in accordance to our account size. Again, a while back, before one of the FOMC meetings, and I was talking about positioning, if you wanted to position ahead of it, which is not really a good idea, but in the case that you position yourself anytime on big moves and you have a hunch or you want to, jump out, take your account size and find out what 1/3 of that is. And when you're risking money, you only want to risk that third. Because again, a lot of times now, most people don't get the trade direction wrong. What they get wrong is the amount of risk and time involved in the trade. So this is the primary reason that margin calls happen, is because risk is an ongoing adjusting thing that we don't ever seem to realize. In futures, it's easy to see because they send you an email, they send you a note or a marker that lets you know the margin to trade contract size has changed. When it comes to options, it's not an easy thing to picture because your margin or required margin just kind of quietly creeps up. You haven't changed anything position wise, but that required margin creeps up, and eventually it creeps up to a point where your broker is not happy and they need to, or they feel the position is so dangerous that they have to exit you out the position. So please be careful of that. Please know and understand your risk. This is about to be really crazy as we go through this consolidation and come out. Wishing you a positive trading day. Hoping we go out and make it a great one.